Well, that closing bell on Friday signaled the end of an historic week. 5 straight days of gains and a new record. The Dow opening this morning near 14,400. So, what to do now? Is it too late to get into this bull market? And what do you do if you just have a few $100s and you want to get started? Clark Hodges is here to help us sort it all out. It's nice to have you to talk about this. I mean, conventionally, you want to buy low and sell high. So if you really wanted to be making money in this market, you wanted to get in when it was at its lowest, which was March
9th
of 2009.
Yeah.
Okay, so if you put $10,000 in the market at its lowest point in March of 2009, what would you have today?
Well, if you had an S&P index fund and you put it in on March 9th, it's up 128% since then. So you'd have $12,800. If it was in the Dow Jones is up 118% since then, cumulative. So you'd have $11,800.
And so now everyone's racing and rushing to get into this market thing. Well, now I want to get part of this because it looks like it's on the upswing.
Right.
Aren't you, though, at a risk if you invest now of having to deal with a correction of some sort? So you're buying high, and then if you panic, you're selling at a loss.
Sure. It's a psychological game right now because you see it at a high, and you're not in it, and you feel like I'm missing something. I'm missing out on the party, so to speak. So you got to ease into it. The most important thing in investing is time. So don't think you're going to be ahead in 2 or 3 months. Look 2 or 3 years down the road. But maybe do a half today and a half in September, or a quarter today, a quarter throughout the year, and ease into it so psychologically you're not beat up.
So the Dow is a compilation of 30 companies. The S&P 500 is 500 companies. You believe that the S&P, that story there is still yet to be told, that it could reach its record high, and that may be where more of the value is.
Right. The S&P is about 2% off its high. And if you look at the S&P, it's a deeper index, 500 stocks. You take a look at something like Apple Computer. Most people, most of the pundits were saying Apple was really moving the market 2010, 2011, 2012. But since September of 2012, it's down 40%. I was
going to say Apple's been down.
The market's up.
So that means there are other companies.
It's a deeper move.
Yeah, but there again, with 500 companies from which to choose, you have more potential to make wrong choices in terms of which companies you invest in.
Sure. There's some industries that have been dead and that are now waking up. And that's good for the overall economy.
And that's where the value is going to be moving forward, right?
You want to find an industry that's going to start growing again rather than one that's peaking like an Apple.
Okay, so you have $1,000, let's say $500 or $1,000. You want to get started in investing. Is this the market to do it, and how do you do it?
If your time horizon is long, it's always the time to be in the market. But you've got to understand the most important ingredient is time. So take half of it today, put it in a growth mutual fund that you like, that you agree with their philosophy, do a little research, and then maybe, you know, the market usually takes a breather in August or the summertime. Maybe say Labor Day, I'm going to put it back, the rest of the money in the market, and you've eased into it. So if it's down 10% in July,
all of your money is
you
not
don't feel bad.
That. Right. And all of these points that Clark is talking about also apply if you've already got a 401k retirement account and have choices within that retirement account. So Clark, thanks for being here. Appreciate it. And let's toss it on over to Izzy. Izzy?
Okay, Ron, thank you.